Hey guys, welcome to Individual Investor. It's time to give you guys an update on my Rule 1 investing portfolio. At the moment, I've made about 16% in profit by investing in Taiwan Semiconductor Manufacturing and Paycom. However, at the moment, I'm all in cash because the Rule 1 indicators told me to get out of my positions. Let's take a look. As you know, I have been following two semiconductor companies as part of my Rule 1 portfolio, TSM and ASML. Now, Paycom or PAYC is a company that actually makes software for human resource management and online payroll. It is a company that recently caught my attention. I didn't make a video on Paycom, so let me show you guys real quick here the finances due diligence to demonstrate why it is a potential Rule 1 stock as well. Here we have the analysis. As you can see here, the 10-year averages are pretty strong. All the figures, all the big five numbers check out here, and especially the free cash flow, which is pretty remarkable, 124% year-over-year growth. And if you can see a difference between the first year and the last years, in the last 10-year period is pretty impressive. Pretty strong growth there. The financial health, super strong, super healthy. The debt to free cash flow ratio is fairly small, so we're good there. And then the sticker price, here we have the full calculation. As you can see here, the current price is actually above the margin of safety price. Now, when I invested in Paycom, I actually bought at 285, so it wasn't too bad. The difference was very, very small. I think that even though the current price is above the margin of safety price, in the book, Phil Town explains that if you have pretty strong conviction about the growth prospects of the business, the margin of safety is just an estimate. It's not precise, so you have to play it a little bit by ear. So as long as you're close to the margin of safety and you can see that future growth, you should be okay. Now let's take a look at my account statement to show you the positions and the trades. So you can see here that I generated this for the last month. Oh, sorry, the last 2 months. And here we have the two stocks, and I bought 36 shares of Paycom at the average price of 285, like I said before, and for TSM I bought 188 shares at 85.07, and then I exited my positions. Paycom I exited at 305, and TSM I exited at 106 on average. I actually did it in 2 steps. I sold 50% of my position first, and then I sold the other half. Okay. And remember that I live in the UK, so we have to take into consideration the pound to dollar conversion, which you can see here. So as you can see, on average, it was about a 16% in profit. Okay, now let's take a look at the trades on TradingView. So here I have Paycom. The white vertical solid line represents the buy, and the dotted line represents the sell. So as you can see here, on May 30th, I bought 36 shares at 285, and you can see here that all the indicators were green, or the Rule 1 indicators. So if you look at the price was above the 10-day moving average, MACD was about the signal line, and also the stochastic was where we needed it to be. Now the sell, here all indicators were telling me to get out. So we have the price below the 10-day moving average, we have the MACD below the signal line, and we have here the K line below the D line on the stochastic. Now in hindsight, as you can see, I could have probably waited and look, the price recovered a little bit, but I'm following the rule 1 criteria, so I need to stick to the plan here. If we could take a look at TSM, we have a similar graph. The white solid line represents the buy. I bought 148 shares at 85, and as you can see here, the price action is above the 10-day moving average. We also have the MACD line above the signal line, and we also have the stochastic K line above the D line, and that was back on May 8th. Now what I did here is actually I stayed in the position and sold half of the position, or actually a little bit more than half, 75 shares at 110. And as you can see here, still from a rule 1 perspective, we were still good. However, at that point the stock had moved 30% upward, so I wanted to lock in some profits. And typically whenever you have a price gain of 20, 25, 30%, it's better to start thinking about exiting just some of your positions. Some people do 30%, some people do 40. I wanted to exit half of the position to lock in some gains, and in this case I'm glad I did, because as you can see, right after the price went down and all the indicators, all the rule 1 indicators, the moving average, the MACD, and the stochastic all told me to get out. So that's why I actually sold the rest of the position of the shares, 73 shares at 103 at this point in time. That was on June, I think that was June 13th. Alright guys, that's all I have to share with you today. If you like this video, please hit that like button and subscribe to my channel to stay up to date with my content. I will continue to monitor these rule 1 stocks, and when the conditions are ideal and the indicators tell me to get back into those trades, I'll jump in and share the results with you all. Thanks again for joining me, and I'll see you next time.